Good afternoon, and thank you for joining us. My name is Libby Sartain, and I'll be moderating today's session on human capital management disclosure. Most companies have by now completed the initial SEC-mandated exercise to report material information related to human capital in the annual report /10K. We're here today to understand what might be gleaned from those who already reported and their disclosures, as well as what some companies are thinking about and saying about their plans for future disclosure and the level of transparency they provide on workforce-related issues. We have two experts in disclosure with us, and they have brought proxy research and survey data. Deb Lifshay and Sharon Podstupka are from Pearl Meyer's New York office, and they are both heavily involved in executive compensation disclosure. Like many of us serving on compensation committees, are beginning to see significant overlap in how a company may tell its compensation philosophy story and discuss its material workforce management position. Before we get started, though, I'd like to turn it over to Sienna Breen with the NACD education team to cover some housekeeping notes. Sienna?
Thank you very much, Libby. As Libby just mentioned, we have a few housekeeping announcements before we get started. First, I'll talk to you about the tools that you have available in your webinar console. On the left-hand side of your console, you can see all of today's panelists and access their bios. In the top right corner of your webinar console, you can submit a question to be answered by our speakers during the program, time permitting. We're going to get to as many questions as possible at the end of the webinar, but as I mentioned, you can submit a question at any time. Please note that if you do submit a question, you will be opted in to receive future executive compensation thought leadership from Pearl Meyer. And in the bottom right corner, you can download a copy of today's slide deck and access additional resources. Today's slide deck is also available on pearlmeyer.com at the URL on your screen. As always, a recording of this webinar will be available early next week at both nacdonline.org/webinars and pearlmeyer.com. Your participation in today's live webinar earns you credit toward maintaining your NACD credential. NACD fellows will automatically receive 1 skill credit for their participation, and certified directors will automatically receive 1 recertification credit for participating. Please note that you must attend this webinar for at least 50 minutes in order to receive either credit. Finally, we will have a few anonymous evaluation questions at the very end of the program, and we would really appreciate your feedback, so please stick around at the end of the webcast to answer those questions. And now I would like to turn it over to our next presenter, Deb, to get us started.
Thank you, Sienna. Thank you, Libby. Good afternoon, everybody, and thank you so much for joining us for this webinar on the penultimate day before a long holiday weekend, which is great because things are going back to normal. And on that note, I just wanted to point out it's strange and unusual not to see all of your smiling faces in a little Brady Bunch box on this call. This is not a Zoom call after 15 months of Zooming, so I hope you dress comfortably and sit back and enjoy our discussion, which is on one of our favorite topics for this year, and it's a topic that Sharon and I spent the better half of this year researching, thinking about, talking to clients about, and trying to really discern what was required. So if we start at the very beginning, the change in the SEC rule was really the impetus for this large study. And as you will recall, the change happened at the end of 2020 when the SEC adopted a rule that slightly changed Item 101C in the 10K required disclosures. Prior to the end of 2020, the rule with respect to human capital and employees simply required the number of employees to be disclosed. And in fact, that is all that companies really put into that disclosure. It was 2 lines, told you the number of employees. Sometimes it would tell you the number of unionized employees. It might tell you the number of overseas employees, but that was it. That was all that was required. And really, in the past 20 years, everybody's been focusing on this. This was part of the SEC's agenda to modernize disclosure rules so that they're more in sync with how corporations actually function. And so the SEC realized that the concept of high-performing talent is both scarce and critical to performance and the way companies operate today. So this has been a growing movement for 2 decades that finally culminated in this new rule at the end of 2020. And so what is this new rule, you may ask? And the answer is the new rule isn't so different from the old rule. I think there was a lot of dissension among the commissioners about how much to include. Some commissioners wanted more detail and more prescribed detail, but the commissioners that ultimately won out took a principles-based approach. And so what they did is they said, in the final rule, we will require you, company, to disclose the total number of people employed by your company and any human capital management measures that are material to the operation of your business. The term human capital management was not defined. The final rule did not require any other quantitative measures, and it simply left us with this dicta to try to figure out what this term meant. It said, you can address, but you don't have to, any material items regarding development, attraction, and retention of personnel. So we had this rule of a total of 57 words to try to figure out and try to help our clients really at the last minute, because it was the rule was applicable to your immediate next 10K filing, how to disclose and how to expand and what should be considered. So that was sort of what was driving this change from a rule perspective and a disclosure perspective. What we will talk about in today's discussion is how did companies react? What did we learn as we were going through it? And what do we think are the key takeaways and the direction in which this will push us for next year? I know, Libby, what was your experience with getting this final rule so late in the game?
Yeah, it kind of came, a lot of things we see and plan for, but this kind of came out of the blue. And I think we were all kind of scrambling, saying, what do we need to cover? What does it make sense to cover? And we certainly want to have credible and accountable information. I think it was probably particular to each company and what they're all about. For example, I serve on the board of Manpower, and we are a talent management, human capital management company and a workforce solutions company. So it was very important to us to think through what we wanted to disclose and have a long-term plan about where we're going.
Right, and my experience with companies was similar. We knew it was coming, but we didn't know what was going to say, and because it came out so amorphous and so brief, we really scrambled to get our arms around what would be the right disclosure for each company. So if we move on to the next slide, as by way of context, how did we approach and how did companies approach tackling this very, very vague rule at a time when social justice and issues that are covered by HCM were really at the forefront of everybody's mind? So the first way we tackled it is we tried to figure out how to help our clients in practice. We tried to define what is HCM, and we did that by looking at other ancillary documents in which we found human capital management discussions. We looked at proxies, we looked at letters to shareholders, and probably the most helpful was we went back and we looked at sustainability reports, which not all companies filed, but which had a lot of human capital management in addition to other ESG topics. So we called all of the information we had that was already out there to see how we could help our clients define and manage HCM matters in the 10K, which was the immediate action. Then we fast forward to April, and we were able to look backwards. So we were able to look at filings of about 1,900 companies and see what they actually put into their 10Ks. We also, as part of this study, looked forward. So we issued a quick poll to about 125 respondents in which we gathered thoughts on how they experienced the rule, what they were looking at, what they were worried about, and how they're thinking about changing the process going forward. And then we also studied some best practices and key takeaways, which we'll provide you as we go throughout this through this presentation. So with that, I will turn it back over to Sharon.
Thanks, Deb. Hi, everybody. This is Sharon Podstuka speaking. Before we dive into all of our glorious research, we wanted to talk a little bit more about where the push for more information is coming. And I think it's interesting knowing that 2020 was sort of the perfect storm with all things converging, COVID-19, social justice issues, et cetera. really the push for more came or started to come before that. And the first thing that we already knew was that, experts out there had already been pushing to help investors understand the intangible value of people and talent, but not just the intangible value of people and talent, but the investments that companies make in their people through these HCM initiatives that drive workforce engagement, operational performance, and of course, the theory is long-term shareholder value. In addition to that, we know that many institutional investors and corporate leaders have been actively taking, public stances on lots of issues, again, like racial and gender bias, economic and health inequities, to name a few. And then to take it even further, beyond the institutional investors and corporate leaders, there are all of these various other external and internal stakeholders who really care and are taking activist roles in changing corporate workforce practices. So we can look at consumers, we can look at social responsibility advocates who are basing buying decisions on corporate reputation and practices. I think we know that HCM can really impact a company's brand reputation and where people are looking to spend their money. We also know that activist shareholders are also leveraging their investment power to drive organizational change through things like shareholder proposals. And as Deb mentioned, the SEC has been committed for a while now to openly helping enhance transparency, not just on, HCM disclosures, but I think generally speaking disclosure, and also, ESG factors. And just a quick note on ESG, I think ESG and HCM are the acronyms of the day. And we like to think of HCM falling actually under that ESG umbrella, primarily in that S or social bucket. So I think, with that, there's also this caution, right, Deb, about what we're going to say or how much?
Absolutely. So despite the theory and the push for more, which everybody agrees is probably a good thing, I think a word of warning here, and for all of you who are attorneys and deal with your attorneys, is we have seen a rash of plaintiff suits come about, particularly in the lower courts in California, where plaintiffs' attorneys are saying that statements made about promises in HCM, and particularly on diversity, equity, and inclusion, that companies have alleged, companies have misstated or had material omissions in the proxy statements. And just so you have to be a little bit careful and tread lightly, because there's a difference between an aspirational statement and a commitment in your disclosure. In some of the lower courts, they've said aspirational statements that you can make are about shared values and the importance of a diverse workforce and good working environment, ethical practices, and good governance. That's all fine, and that's all something we want to see, and we want to see disclosed, we want to see it in practice. But once you try to get to a point where your disclosure is a little bit more specific, you want to make sure it's either completely accurate about any promises you're making and you're able to fulfill any promises. So just a word of warning as we push for more.
Deb, this is Libby, and I think beyond just the lawyers, your stakeholders, including your employees, your investors, and even the communities in which you operate, are going to be looking at what you promised, and they're going to want to see progress and results. So I think actions are going to speak louder than words in this particular case.
Absolutely. And now more than ever, employees are reading all of these documents that they once never read. So you really need to be careful about how you phrase things and, whether it's aspirational or commitment-wise. So we move on now to a big wall of words here. But I bring this up because I wanted to show the audience here what we did to try to break down whatever HCM was, because again, there was no definition, there was no guidance, and it was just a big category of people issues. So what we did is we looked back primarily at sustainability reports, and we thought, okay, how are people grouping these different items? And we looked at every item that could impact people issues, and we put it into buckets so that we could help our clients work through using a tool what they were addressing, what was material, and what they could disclose. So some of the items, and we also use these buckets for our own studies that we'll discuss a little bit more, so I wanted you to see what was in them. The first one is pretty easy, general workforce demographics, which, like I mentioned before, was already sort of in your older 10Ks, the number of employees. But some companies went further and they broke it down by part-time, full-time, temporary, seasonal. A lot of companies view this as low-hanging fruit to get some additional quantitative data in that disclosure in the event the SEC was looking for it. The next very big bucket was anything that had to do with diversity, equity, and inclusion. So statistics, general statements, aspirational statements, commitments, or studies you've done on pay equity, pay gap, and things of that nature. The third bucket was all about what were your policies and procedures about hiring, promotion, succession, and turnover. The fourth bucket was very numbers driven, which was what is the cost of your labor, how do you format your compensation programs for employees, not for named executive officers. The fifth bucket was on training, development, and did you do any engagement with your employees? Did you do surveys? Did you follow up on the surveys? And then the sixth bucket was our catch-all, which, depending on what industry you're in, you may or may not have it. One of the most popular items in the catch-all this year was discussion of how COVID impacted your workforce and how you took various safety measures to protect your employees. It also captures things that go external to your company but are important people issues, such as a description of community outreach programs, volunteering, and policies for retaining your outside vendors. So those are the 6 buckets we used for this study. So if we move on to the next slide, what we see is I'm sorry, go ahead.
Oh, sorry, this is Libby again. I was just going to say, I think this really shows that organizations focused on what is germane to their organization and areas that they had data and had been thinking about and sort of repackaged what they had. And for example, at Manpower, we talked about upskilling and reskilling our own workers and the workforce in general, because that's something we've been working on.
Right, and that just shows the breadth of all of the detail on that page was only sort of like the top layer of the different forms of HCM that were discussed, and that may be relevant to one industry, but not another, which I think is a common through line in this whole analysis. But if we look at it again, we had main data group analyze the data of Form 10Ks that had been filed as of the end of April, and we looked at about a little bit over 1,900 filers. And this is what we found, which was really not surprising. It is a little surprising that general workforce dynamics wasn't 100% because you do have to, under the rule, disclose the number of employees, but 96% of companies reported something about their general workforce demographics. 87%, again, that's also a high number because there were so many things in that bucket, and many of them touched upon COVID-related issues. Almost neck and neck were topics such as diversity inclusion and training, development, engagement. And we've been talking a lot about this internally. We feel that the training, development, engagement, and even the hiring, promotion, succession all kind of goes hand in hand, has many overlaps with diversity, equity, and inclusion. So it's not surprising that those were also common themes that ran throughout these initial 10K disclosures. And then the lowest, at least this year, were statistics on hiring, promotion, succession, and turnover. So those were our findings looking backwards at this initial year.
So this is Sharon. As you can imagine, we did a lot of reading over the last few months, and in addition to the data gleaned from main data group, we also had some of our own observations. I think what's interesting here, but not surprising, is, almost all of the companies that we looked at presented a mix of qualitative and quantitative metrics. But really, quantitative metrics were less frequent and often, as Deb mentioned, very high level. I think, it was with the exception of the general demographic information, which we know is already required, not surprising, many of these initiatives that we've been talking about and describing are difficult to measure. So, companies really took an opportunity to tell stories about where and what they were putting their money behind and explain, how they were addressing certain HCM issues. 2020, of course, this past year, we couldn't talk about it without talking about COVID-19 and the impact of COVID-19, especially on human capital. And there were lots of themes that came out of that we think will continue to be disclosed as we move into the future. Things like safety protocols, work from home initiatives, how companies were keeping their staff who couldn't work from home safe and well, both from a physical and mental standpoint. We also think that this mental health theme and well-being in general will continue to be a priority for companies, especially if that's where they're making material investments in their people. Things like flexibility and work-life balance are really strong areas of focus, and we know that employees are also looking to understand how their companies are managing all of these things or making changes based on the new world in which we live. Not surprising also was DEI was very important. Again, often described, qualitatively, by and large, the most common theme across everything we saw. And I think it goes without saying, but we're going to say it anyway, the length of the disclosures in the 10Ks, and again, we're talking specifically about the annual report 10Ks here, the length increased, but the word counts in HCM really varied. There were no real boilerplate common types of language that were used, and generally speaking, the average was about 800 words for anyone who's interested in those numbers.
Right, and this is Deb. On that note of boilerplate, it's kind of interesting because as we started engaging with clients when they're right before their 10K was due, they're like, well, what is everybody else doing? Where's the boilerplate? And really, we did think that perhaps it might turn into boilerplate, but because each company does such vastly different things with their HCM, both in terms of disclosure and implementation, there was no boilerplate, and it was quite different from, I think, in 2007 when we got the new CDI rules, compensation discussion and analysis rules, where things did sort of evolve into boilerplate, and now everything kind of follows a certain format. But you have to remember, again, there the SEC gave us pages and pages of rules to follow, so it was a little prescribed. Here, we got 57 words in a rule, so everything looks different.
Well, now it's time for us to poll our audience and see what's going on in their companies. So I'll read the question and give you a minute or two to vote, and then we'll see how you compare to what Deb and Sharon found. Beyond the new SEC requirement, to what degree is your company currently feeling obligated in some way to disclose more information about your HCM initiatives and priorities? Significant, moderate, limited, or none? Take a minute to fill that out. I did it too. All right. Looks like right now moderate is in the lead. Deb and Sharon, how does that compare to the results you saw?
Yeah, this is pretty consistent. This is Sharon, by the way, speaking. Before we compare the findings, what Deb and I did in April of this year at Perlmeyer is we really wanted to take a look and see what was happening beyond the 10K disclosures in terms of transparency around HCM issues. So what we did is we analyzed a little bit more data across a variety of demographics. Our study was a quick poll, so it was a very short time frame in which participants responded. We had 125 participants from a mix of publicly traded companies, also private for-profit companies and non-for-profit organizations. 75% of the respondents were from public companies, not surprising. About 20% were private and the rest were not-for-profit. So as you can see here and compared with what we just saw, most respondents are feeling obligated in some way to disclose more information about HCM, either initiatives or priorities, outside of what was required in the 10K. And I think that, as we heard from Libby and Deb, the rule came out at the end of 2020 as if we weren't busy and stressed out enough about what we were going to say about 2020. We now had this new rule and had to scramble to get something compliant into the 10K. So we're going to talk a little bit more about, how companies leverage their other communication vehicles to tell their stories beyond what was required. So when we asked that question, we also wanted to ask or think about, where is this pressure coming from for more information beyond the SEC rule? And so we looked at this in two ways. You can see here on the slide, the first and greatest bucket of pressure was actually coming from boards for more information. And so, it was the boards that are, putting pressure on their management teams to explain, where the priorities are, what the initiatives and activities are, and how many of these issues were being addressed. And it's not surprising because the next largest buckets were the pressure was coming from the proxy advisory firms and investors. And so there's this trickle-down effect coming from the outside to the boards and then the boards down to management. And then beyond that, and not far behind, and we've been talking about this quite a lot, is that we know the workforce is asking for more. Community activists and media also are trying to find out more information. And, I think it's not a secret that most folks don't really read the guts of the 10K. They're looking to other areas for information about HCM initiatives.
Before we go to the polling questions, I think it was interesting that you specifically called out the comp committee, because on many organizations, the comp committee has expanded to a broader committee like the HR committee or HCM committee. But this reporting sort of fell under the auspices of several committees on my board, really, because the comp committee looks at the HCM matters, but the audit committee looks at how we report in the 10K, and then, of course, governance is concerned about ESG from the governance standpoint. So it really does touch a lot of different committees. Well, now we have a polling question, and that is for 2022, do you anticipate expanding the HCM disclosure in your annual report and 10K? So I'll give everybody a minute to submit their answer, and then we'll see what everybody says. Looks like most 68, almost 69% are looking to expand. What do you say about that, Sharon and Deb?
Sure. This is Deb, and I thought about when I saw this poll question, the first thing that came to mind, or my gut reaction, maybe as an attorney, is, well, it depends on the company's risk exposure tolerance, really. And companies were very mindful of that this year. They didn't want to be first out of the box with anything. And I think the gut reaction for most areas was disclose as little as possible. And so you went through this cycle of first disclosures that were back-to-back with the issuance of the final rule of companies really trying to stay brief. And so it is not surprising to me that most companies are thinking about disclosing more. And in fact, our quick poll survey said 52% of companies are expected to disclose more. When we dug a little deeper and asked, in what areas do you think that you will be disclosing more, really not a surprise at all that diversity, equity, inclusion 91% of companies do intend to disclose more, dig a little deeper, give a little bit more about how they are trying to improve environments and study inclusion, among other things. Other topics that, as we mentioned, sort of go hand in hand and dovetail into promoting diversity, equity, inclusion are training and development and hiring, retention, succession, and turnover, because you can't really work on one without the other in these three areas. So it'll be interesting to see how this all plays out and how the word count increases and whether people really will stick to boilerplate or add on next year.
I think this is where you really are going to see a lot of intersectionality between the ESG reporting and the HCM reporting because they're so connected. Anyway,
Absolutely.
we have another poll, and it is for 2020-2021. Did you disclose your company's HCM initiative and priorities using any other communication vehicles in addition to the annual report or 10K? And I think everybody's probably answered that, so we can see the results.
Oh, this is interesting. This is Sharon.
Yeah.
This is interesting. I'm going to move us on to what we found. It's actually pretty close. And this is really where I was most interested as the communications consultant on the line, was to see really where companies used other methods of communication to tell their stories. And so in the poll we just took, about 40% of you said that you didn't use other communication materials, and that's about the same. Under half of respondents leverage other communications in 20 to 21. You can see here that the proxy statement was really the tool, the communication tool that companies use to tell their stories. I think, most of you probably already know that proxy statements have gotten pretty creative in recent years, and it's more widely read and in most cases easier to read than the guts of a 10K. My own feeling is that the proxy statement for many companies has turned to a catch-all document, and it's generally easy to find a home for certain topics. So, most HCM narratives in the proxy statements this year were, found a home in a corporate responsibility section or the governance section, or generally mentioned in a proxy summary, at least to get some visibility. And not far behind proxy statements were company websites. And if we look forward to next year, just over half of our respondents said that they would use additional communication beyond the 10K to disclose HCM information. Interestingly here, it looks like companies are going to leverage their websites more than proxy statements. Proxy statements and 10Ks are a point-in-time publication. Websites are generally more dynamic and can be updated much faster. It's easy for people to access and navigate. We can also see here that companies intend to use more targeted communication to employees. Obviously, that will depend on what they're trying to highlight. But what I want people to walk away with from this slide is that a mix of media is truly going to be key to tell stories using a combination of external filings, the internet, and really more reader-friendly communication tools if your goal is to reach more and diverse stakeholders.
And I think that a lot of companies have been talking about things like their culture and their DEI initiatives on their own websites and social media. So the board may not be thinking of that as part of their role.
Yeah, and Libby, this is Sharon. I think it's really important too. I mean, all of those themes and messages really need to hang together. So, using a mix of media and finding the low-hanging fruit to disclose in your 10K because you have to, versus the things that you really want to highlight and make sure the messages resonate with your stakeholders, whether it be your employees who are pushing for more, or the community, or activists. Finding the right homes for those messages is part, or should be part, of the strategy.
Yeah, right. And this is Deb. It's not only those stakeholders, it's customers, right? People are not buying products or using companies based on a quick, Google search of their website looking for certain words. So I think my position is everything matters when it comes to this. It's not just the 10K.
Exactly.
So I think we've moved on to, we've given you sort of an overview of our findings and our data, but our quick, we wanted to provide you with really the meat of this, or the substantive part, which is what do we do in the future, and what are our takeaways from all of these things we've seen over the past lightning rod, really like 5 months of data and analysis. And the first thing is, which should not surprise anybody on this phone, is compensation professionals and board members, peer practices matter. That's what we do. That's what we look at. And so when we ask companies in our quick poll, is the way in which your peer companies disclose important to you, 3/4 of them said yes. We care about how other people are doing it. We're looking at it. We're analyzing it. And of course, now this year, with a year of data behind us, a year of disclosures, people will be focusing on peer companies. They couldn't this year, but now they will. But then when we ask them, how will this play out? Will it change how you disclose? It was sort of interesting that the number of people who were relying on or considered peer company data important went down slightly, and about 64% of participants said if they saw clear trends, they might follow them. 36% were impervious to what other people were doing in terms of disclosure or in terms of implementation of various HCM-related activities. So I think the message that is sort of going to come full circle throughout this is one size doesn't fit all, and just because some peers are doing it one way, it might not be appropriate given who your company is and what they are doing to disclose in the same way or implement in the same way.
It's a very interesting discussion because we spend so much time thinking about who the right mix of peer companies are for compensation matters, but I think the peers will be different when we look at HCM and what we're doing and what our philosophy is about it.
Oh, that's absolutely true. It becomes really clear when we broke down some of the HCM matters by industry. Obviously, those in manufacturer and chemical, safety was much bigger and more fulsome discussion, and it wouldn't be in maybe a financial services company. So it's apples and oranges throughout this discussion.
So if we move on, one of the common themes we talked about earlier was DE&I, and in our quick poll, our Pearl Maya quick poll, we actually asked respondents if the new SEC rule helped them to identify any potential HCM areas to assess in the future. And surprising to us was that, under 40% of the respondents said that this past year helped them identify areas that may need more attention. But of those respondents, DE&I was the clear front runner again. So not just in terms of disclosure, but where there was room for improvement in practices and initiatives. And Libby, I was wondering if that surprised you at all.
No, it didn't surprise me because I think it's what every company and many, many boards have been thinking about, is we really need to show progress on our DEI goals. And a lot of times we talk about it, but we don't move forward. So I think now's the time to do that.
Yeah, and you guys can see here, the other area that respondents said they could improve was in their hiring, retention, turnover, and succession practices, which I think we know has a direct tie to the DE&I bucket. So the two go hand in hand.
Great, and this is Deb with our great takeaway number 3. Again, a theme about one size doesn't fit all. We all care about what our peers are disclosing. We care about what our peers are doing, but the impact of this rule on each company has been, vastly different. We did, in our quick poll, we asked overall, how did your company respond to the new HCM rule, and what did you think about it? And, there were some interesting and visceral reactions, but on the whole, it was split between 3 buckets. One was really quite progressive, that it provided a powerful platform for our company to showcase everything we do. These respondents were also in the bucket of, and we acted on this, where we saw shortfalls and we thought about ways to improve going forward. About a third of the company said it allowed us to assess our HCM practices and maybe think about it, but we didn't love the rule. And then about 27% said it was purely a painful exercise in compliance, and we pulled it together. So that was sort of the takeaways. It was split. It was all over the place, and which sort of brings me back full circle to everybody was like a little annoyed and frustrated that the SEC didn't give us a better rule. But maybe what they realized was, that one size doesn't fit all. And by giving us 57 words, which didn't mean much to play with, you were really going to have to tailor this discussion to the appropriateness of where your company is and what they did. All right. And, after our 3 big takeaways, which is people cared about what their peers did, people are focusing on DEI for next year, and one size doesn't fit all. There were a few other notes we wanted to, little tidbits we wanted to give you as we thought and we worked with companies about what they're thinking about, and comments we heard moving into 2022 for next year's disclosure. And one of the common themes we're hearing is, do you put your money where your mouth is? Especially if you're talking about diversity and equity and inclusion, you're talking about your aspirations, are your compensation plans tied to these goals? And particularly with respect to your CEO and your NEO, where you're talking about all of the disclosure that it's obvious in the proxy. In the studies we've looked at, only about 25% of companies filers are incorporating anything, but of those 25%, only 90% of the time is it given a specific weight or specific measures. So they're more squishy goals, they're qualitative rather than quantitative. So you need to think about, if you're prioritizing certain HCM matters, are they playing into your compensation programs? Libby or Sharon, have you talked to any of your clients about how these play in and what their opinions are?
Well, we on our boards have been really talking about what is our strategy, what is a framework or the metrics that we might use to measure that strategy, and then how is it best to report, and what should we report that we feel like we can be accountable for and show results. And I think that's probably the conversation that a lot of boards and committees are having right now.
Sharon, have you run into a lot of companies trying to, struggling with disclosure and how these measures tie into compensation?
Yeah, I mean, I think it's always one of the bigger challenges in describing, especially because they haven't been really quantitative metrics in the past, but companies are looking to get credit for qualitative assessments, especially in annual incentives. So, how do you share those assessments and how it plays into, a compensation committee's discretion and award payouts? So it's always a challenge. I think the good news is with more structure, and it sounds like that's the road that many are starting to go down, it should be a little bit easier, to quantify, at least in a CD&A. But still, it's tricky business, right? There's this art and science of the narrative to not promise too much or give away too much.
Great, thank you. And another takeaway that kind of gets at a topic we talked about earlier, who are your peer companies for this? Because they're not necessarily your peer companies for financial or compensation. Maybe your peer companies for looking at what you're disclosing on an HCM matter are different. They might be, for example, again, in the manufacturing sector, maybe you're looking at other manufacturing companies who might not be in your space, who might be much smaller, who might have a different audience and composition, but maybe that's the right peer company for a safety discussion. Another thing that some people have been talking about, and we're seeing a little bit more frequently now, is do any of your NEOs now include either a CHRO or another HR individual, or even another individual who is in charge or has a significant influence over HR items? Because if HCM really matters and your people really matter, shouldn't people at the top of the house be, be involved on all of that? A fourth thing that we're looking at, and we're tracking very closely with the change in the administration and the changeover at the SEC, is how regulations will change over time that might require more. So we go from 57 principles-based words to, okay, now you must disclose some EEOC specifics, required specifics in some of your filings. So we're carefully tracking that. And, also what companies have been focused on this year is to make sure that anything that is filed in a different forum coordinated with and did not contradict what was then written in the 10K or the proxy. A fifth item that clients were talking about as we went through this are what's proprietary and what becomes a matter of competitive advantage. So, for example, some clients closely track their retention and their turnover data and their recruiting data. And if it is material to them, should they be reporting it, and would it harm them on a competitive level? And then, of course, the last thing we want to leave you with is how much do you want to promise? And this dovetails into the question of, sort of risk exposure, what you're sure you can attain, what you're sure you can't attain, and you want to be true to your stakeholders, your institutional investors, your activists, your clients, and your employees. So I don't know if you had anything else to add on the wrap with that, Libby and Sharon.
This is Sharon. I was actually, sorry, Libby, go ahead.
No, you go ahead. I was going to wrap it up and move to questions. So you go ahead and then I'll go on.
I want to make sure we have time for questions. I was just thinking too, as we were going through this last slide, is thinking about how it really might impact some of the specific narrative in the CD&A disclosure for 2022. It'll be interesting to see how, business overviews shift and narratives shift to help plant some of these seeds, maybe in a softer way. But I guess to be determined.
Well, and actually that's a great segue, because we have some great questions from the audience, and the first one I have really comes right after what we've just been talking about, and the person asks, how would we describe what a potential straw model for HCM disclosure, say 2 years from now? What will it look like?
Okay,
it's a really good question.
I think, but contrary to what I said earlier, I think there will be no boilerplate, but I do think that they will take on a certain format and a certain structure that will be bigger and more fulsome than what we saw this year. Other than that, it's really hard to predict in the absence of additional legislation.
Yeah, I don't think it'll be 2 years from now, but I do think eventually we all copy what each other does, and we'll end up with some pretty consistent formats, unlike what we saw this year. And I actually think that's a shame, because I don't think one size does fit all, and I think it's fun and interesting for investors to see the different personalities of the organizations they're investing in.
And I think it's interesting too, because, and forgive my point of view here, I think, the 10K doesn't necessarily have, I love the word personality, Libby. I think about a 10K as not having too much personality, right? It's really that compliance document. It's a word wall and numbers walls, but really there's this opportunity, not that it's required, but to tell some really good stories in these other, using these other communication vehicles like the proxy statement, like the corporate websites. The sustainability reports out there are really quite amazing, the companies that have them. So I think, it's this balance between, what you need to put in your 10K for compliance purposes, and then, for really the storytelling and to help your investors feel who you are as a company, to think about leveraging some of those other opportunities.
Great, and I think that's a great prediction there, that people will do that. Here's one for you, Deb, I think, and oops, I just lost the question. Hold on a second. It jumped up. Okay, hold on a second. I'm just about to be back to it. Okay, Deb, can you comment on the current SEC leanings for even more on DE&I, which could be concerning if the notion of materiality is no longer a screen?
Well, that's a super question. I think to answer the first part is materiality is the through line for all SEC disclosures, right? You're not really required to disclose anything unless it is material. So I don't think that will go away. Again, they're under the new administration, the new SEC and the commissioners and what they're batting around. It could change over time, but it's all, materiality is intentionally vague and subjective. So I think you have to do the right thing. It's a gray area.
I think so. Another questioner says that while HCM disclosures are important, it adds a lot more work for the board and executive management. And are either of you with your clients seeing pushback from your organization?
Well, this is Deb. By pushback, I'm not sure if you're saying pushback against the rule or pushback like we don't want to be the body to write this. But it sort of like segues into the question of who was responsible for this, because we saw a lot of shuffling at the beginning of all of this. Like, we got this 10K and clients started asking us questions, and we were like, well, this is the 10K. This isn't really to compensation committee land. Why are we doing this? And the answer is because it's a people issue, right? So we saw all of these different bodies sort of like coming down or sometimes like tossing and pumping on who would be responsible for this. And it was an iterative process among a bunch of different departments and different consultants and lawyers. And, it was sort of a mishmash, but at the end of the day, it seemed to have gelled.
Well, and just like you showed the slide that, you showed the slide that had all the different topics that were covered. I think that shows that some organizations repackaged what they already were talking about. Some took it very seriously and added a lot of new topics. And so it was just sort of who took it the most seriously and thought it was a good opportunity.
Well, not only that, I think there were plenty of like mature large companies that had sustainability reports, and for them it was very easy to do this exercise.
Well, another one. But keep going. Sorry.
And I think that really that was if there is any best practices we're trying to find any was finding those champions, within the organization, whether it be a stakeholder from the board and senior management with the combination of a lawyer and a consultant to figure out, which areas were the ones that were material that had to be in the 10K versus, where were we telling stories or telling our story in other places. So, my point of view on it is going forward, it shouldn't just be one person's job You know, it has to be a team effort to pull the right, you know, messaging together because it covers, you know, so many different areas.
Well, here's a good question, another good question for you, Deb. Do you think that the legal risks are different when you're reporting in the 10K versus other websites, et cetera, when you're disclosing HCM info?
Well, that's definitely a question that each company should discuss with their SEC attorneys. But I think, you know, when you're doing an SEC required filing document, you want to make sure that you don't have any material misstatements or omissions. And of course, as we discuss all of these HCM matters, if you will, a lot of it is, unless it's like a set quantitative number, it's squishy. And so what's a material misstatement or omission, you have to sit down and think about how it could be construed, particularly by a plaintiff's attorney. In the other documents, like the non-SEC file documents, there are different standards.
So in other words, check with your lawyers as you're going along.
It's very it's facts and circumstances, yeah.
Here's a question that I really like, and it is, with the significant focus on human capital matters, are you seeing more boards adding former CHROs to their boards, CHROs? And I would just start the answer to that one, since I am a former CHRO, and I think this is a trend that has been sort of evolving over the last 20 years, but I have seen it sort of evolving faster with all of the interest on the S part of ESG, DEI, and the HCM matters. I think organizations that truly care about their people and their culture and their talent management are looking for that on their boards. Are you all seeing that?
I mean, this is Deb, there's no doubt that the HR role has increased exponentially in significance, even since, you know, the expansion of the compensation discussion and analysis. So I don't know if it's putting pressure to put someone like that on the board, but it's certainly definitely a heightened level of scrutiny who's taking that position.
I agree.
Well, I think this is the one last question, and I'm not sure if you can answer it off the top of your head, but maybe you can. Do you know of an example that, or a couple of examples of human capital management disclosures that you thought were best in class?
That's such a good question. There are so many. This is Sharon speaking. I mean, we looked at a lot of them, and you know, I think that I'm not going to name specific companies. I think that the financial industry does a really good job of human capital disclosure, not just in the 10K, but just across these communication platforms. So they're always sort of my go-to when I'm looking for HCM disclosure, specifically around, you know, DE&I issues. And then, you know, oil and gas and manufacturing from a safety and employee well-being perspective, you know, also do a really good job, not just in their 10Ks, but, you know, in those sustainability reports talking about the investments they're making in employee safety and well-being. So those are two, at least from an industry perspective, that I always find do a really, really nice job.